Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Let's begin by looking at the US equity session. All the three major indices, the S&P, the Nasdaq and the Dow, closed in negative territory. Now the question is how bad that sell-off was. Now for the S&P 500 index, it dropped over 2% and we haven't seen a drop like this since, well, at least for the last 2 weeks. So now, remember we talked about back in the past that the market is not completely synced with the actual reality. I think now that particular element is starting to feed into the market, and hence we are seeing this sell-off. But the question obviously for investors is whether we are going to continue, whether we are going to see this sell-off continue from here onward, or whether this was just a bit of a blip, 1 or 2 days of sell-off, and then again the rally goes on. Well, the answer to that one is that you have to keep an eye for the S&P chart on a daily basis, and look on the daily chart, see how the S&P 500 performs against its 50-day moving average. If it drops below that, then certainly what we can see is that yes, this sell-off may become more intense from there onward. Now, over in the UK, we had the most important data for the UK's economy. It was the UK's GDP number. On quarter-on-quarter basis, the number dropped by 2%. So the reading came in, more than 2%. The reading actually came in at minus 2%. If we look at on a month-on-month basis, the data printed minus 6% nearly. Now that is the biggest plunge in nearly 2 decades. And here is an intriguing element. The data only shows the pain which the economy endured for the first 9 days. So we still have a long period of the lockdown which is still not reflected in the GDP data. This means that in the coming period, in the coming months, we are going to see the GDP number becoming more worse than, or rather than printing any better reading. But one thing is for sure, given the fact that the economy will be opening tomorrow over in the UK, that these economic numbers such as the manufacturing and industrial production may start to see some sort of a recovery, sharp recovery, but after that we may see some sort of a consolidation from there onwards. Why? Because this coronavirus has left a major mark on the economy. And despite the fact that we have this massive tailwind and support from monetary and fiscal policy, the damage which the coronavirus has caused to the economy, it is going to take some time for the central bank and for the government to repair it. Hence, I do not expect the macroeconomic data to have some sort of a U-shaped recovery. I think it is going to be pretty much an L-shaped recovery. Now, to finish off for the gold prices, as you can see, the price is trading above that 1700 mark, and remember we talked about 1700 mark being the critical price point, because above 1700 it gives enormous amount of strength to the bull case that the price is likely to continue its journey to the upside. But if the price falls below that 1700 mark, then there is this fear that perhaps we may see this sell-off taking place for some longer period of time because the price has failed to stay above that 1700 mark. But remember, you can always protect your upside or downside position by using AvaProtect. That's all for today, and see you guys tomorrow.